Theo, thanks for coming on the program.
Great to be on, Rudyard.
Well, let's go to our quote board off the top. We've got you in the hub today writing one upside to trade war, cheaper housing in Canada. I guess that depends, Theo, on your point of view. Are you an owner or a renter? It's all in the eye of the beholder. Tell us a little bit about what you're seeing in the economic data when it comes to housing, and then let's get into the impact of a potential trade war on everyone's top of mind asset.
Yeah. So we're not exactly seeing cheaper housing just yet. What we're seeing is a very much a softening housing market, and by that I mean you're seeing fewer buyers in the market, which may at one point bring down housing prices. In fact, you're seeing two things, and we're looking at January data that were out last week from the Canadian Real Estate Association. We saw home sales fall by 3.3% in January from December. That's a very large drop on a month-over-month basis. But not only that, we also saw a huge surge in listings and new listings. So you're getting a lot of supply in the market.
11%, Theo, was that right?
First
Was your numbers
11%. Yeah,
showing
that's right.
11% surge in listings? Wow.
That's
Wow.
right. That's the most in at least 30 years. So these are the sort of conditions where you would expect prices to come down, but we haven't seen prices adjust yet. We are in a situation. It's a very kind of strange a market. You've got an affordability crisis. Prices are very high. Canadians are still struggling. Certainly, first-time home buyers and young Canadians are struggling to get into the market. So that is, a big issue. At the same time, it's actually kind of a weak market. You're not getting a lot of people going into the market, in part because I guess prices are high, but also because you have a lot of other uncertainty out there, including what is going to happen to the Canadian economy if Trump imposes these tariffs on us. So it's kind of a very strange, almost a bit of a kind of I don't want to say a holding pattern because we are seeing movement as you notice in listings, but just kind of an era of deep uncertainty right now in Canada's housing market.
Yeah. Let's talk monetary policy a bit here because it has a big impact on the housing market. The Bank of Canada started an aggressive rate cutting cycle back in September. And what's interesting, Theo, is that the all important, 5-year Canadian government bond, which effectively sets the price for, that vital 5-year fixed mortgage, really hasn't come down in the way that we've seen in past cutting cycles. It's as if the transmission mechanism between the front end of the curve, where the bank is cutting the overnight rate, and debt extending further out the curve at longer durations has been kind of broken. A lot of comment that this is about the United States, the extent to which there is a kind of inflation risk there, the Fed on hold in the US. What do you make of all this? That kind of tale of two cities, two very different bond markets in the United States and Canada, and Canadian yields may be getting pulled in a direction the Bank of Canada would not be entirely thrilled about.
Yeah, I mean, I think that just reflects the fact that we are not decoupled from the U.S. in any way, even though the U.S. economy is growing much more, is much more healthy and is producing much stronger growth than Canada is. That is driving interest rates in the U.S. I mean, in the U.S., you're also having rate cuts as well, but also kind of higher or longer term interest rates that are more stuck at higher levels. And that's a reflection of inflation concerns. That's a U.S. economy that's doing very well. And there's a lot of worry that inflation will be sticky in the U.S. And there's nothing Canada can do to escape from that. We are going to just, all that kind of sticky inflation and those higher interest rates in the U.S. are just going to spill over into Canada. So we're going to essentially have to adopt some of the kind of the higher interest rates
Yeah,
and
yeah,
probably
yeah.
higher inflation in the U.S.
They're going to get pushed on us. So if we come back to, and think about that in the context of the Canadian housing market, what we're seeing, Theo, is that these renewals are now happening. So those people that got those rock bottom rates during the pandemic are now coming up with renewal. And yes, the 5-year mortgage bond is down off its highs, but it's certainly way higher than it was in 2021. So people's mortgage payments are going up, and in many cases, they're going up by a lot. Do you think that's got something to do with the softness that we're seeing here in the market? And then layer on top of that, the uncertainty around the tariffs, maybe people worrying about job security. All that to me, Theo, suggests a kind of a gloomy period here, a gloomy winter that matches some of the weather we're having in Canada for the housing market.
Yeah, I think the expectation going into 2025 was that we would have a recovery in the Canadian housing market because of the lower interest rates. The expectation was at least the variable rates would fall. But also, if you remember, you had, some of the regulations around mortgages, for example, mortgage qualification rules were eased, and some of these rules that kind of constrained borrowing have also been kind of loosened as well over the last few months. So there was the expectation you get more demand, maybe as well if prices, kind of ease a little bit. But the interest rate environment, coupled with uncertainty around growth, is changing that picture. Plus, you have the other kind of uncertainty or source of uncertainty in Canada, which is on population growth. We don't know how those caps on immigration are going to affect the housing markets. Everybody's kind of just waiting to see how things will unfold, including developers who also aren't investing or not building new homes because of the uncertainty as well. So you have a situation where the market is really kind of on pause almost and just waiting to see how things unfold.
Final question, Theo. If we see, this is as soon as next week here, the president follow through on threats that he has reiterated, again, as recently as yesterday, that large tariffs are coming for Canada and Mexico, what could that do to this shaky housing market? If people are going to contemplate the reality that a real trade war has begun with the United States?
Yeah. Well, certainly you're going to have weakness in the housing market because there won't be as many buyers out there. People are going to be worried about their job and less likely to go out and buy a home and take massive mortgages. On the flip side, however, we might not get a lot of support on the interest rate side, because if you have a tariff war, that's an inflationary phenomenon that could keep interest rates in the U.S. higher, and that will prevent the Bank of Canada from cutting interest rates as much. So you will get a lot of weak demand, but the housing market won't get as much support on the kind of interest rate side as it would otherwise.
Yeah, that's a very important point. The inflationary effects of tariffs, maybe, Theo, a kind of stagflationary environment. Is that a scenario that you're concerned about?
Well, I mean, in a way, if you're including kind of interest rates in kind of the equation, but I suspect that's an environment where prices are going to fall.
Yeah. Yeah. Okay, Theo Argytis, Managing Director at Compass Rose. Thank you so much for coming on Trump's trade war. We're at day 24, some consequential news next week. We're going to cover it all with you and our other great Hub contributors. So thanks again for coming on the program.
Thank you.
That was Theo Argytis, Managing Director at Compass Rose. We hope you're enjoying these programs, these videos. Please like the channel. Check out this playlist. We got all kinds of great analysis and insights on how this trade threat, maybe soon to be trade war, is impacting different parts of the Canadian economy and your personal finances. So check that all out on our YouTube channel and our website, www.thehub.ca. Talk to you again soon. Bye-bye.